I mean, to some extent, markets are pricing in an earnings recovery, but it's still early days, but we've seen a few surprises already. And given the kind of heightened valuations we're currently at, markets are using any opportunity to actually book profits rather than reward some of the good performance coming in from companies. Even a minor blip is just getting completely sold out. So, what's your view on this
No,
earnings
no,
season?
I disagree with that. I disagree that it has anything to do with valuation. This is more to justify the fact that it's not happening. Simply by looking at the fact that when let's say the FII has a choice more than Indian investor of whether to be in India or not, and they are selling, and last year they sold some 17, $18 billion. But out of that, 10 billion was sold in January itself. So from February 1 to December 31, they sold about 7 odd $billion, which is less than 1% of their holdings in India. And in that 7 billion of net selling, and why I'm separating it is because 11 continuous months it was only 7 billion. January, the whole world, outside US had selling because the money went into US. Is we had two specific issues in these 11 months. One was the India-Pakistan war, and second was the tariff war. And in both of them, these were unique to India. And during that time, there were so many IPOs and new age IPOs and old age IPOs, and everybody believes that these IPOs are of loss-making companies and high PE companies and very much into the future growth companies. And all of them were aggressively bought in the anchor and otherwise by foreign investors. And what they sold, even if you include the 10 billion of January, were the older names, I guess, the banks, the IT companies, the consumer companies, which in theory had much lower valuations than maybe some previous 2-3 years because of lower appreciation in those companies. So I don't think it has to do as much with valuation. It has to do with the fact that on the margin we've had two negative events, and both were related to only India and not to the region and not to our peer group. Also, if you see the real outflow started actually from July. In March, April, May, June, when the rest of the world was getting inflows, even India was getting inflows. And it was in July end or August 1st that the tariff thing came up. So I think it's very much related to that at one level, and then it becomes a self-fulfilling thing. But you make the market go up 10 days in a row for some logical reason, like tariff and something that, there is some 25% tariff or something. And the whole thing will reverse, saying that India has underperformed for 1 year. This underperformance is the worst in 30 years. That during this time, Indian government has made many reforms on GST, on income tax, on interest rate reduction, on whatever reforms in liquidity injection, and therefore it's a natural this thing. Our premium to emerging markets has fallen. Our absolute P is now X% lower. Everything can be reversed. You just have to find one trigger. And that trigger, as of now, I think, is either something wildly good in the budget or just the tariff, this thing coming to normal levels.
If you like the video, do like, comment, share and subscribe.